Welcome back to XRP Update, the channel where we break down the biggest XRP stories, market signals, and crypto developments in a calm, clear, and easy to understand way. Right now, at this very moment, two people are looking at the exact same XRP chart. One investor just sold their XRP after weeks of stress, frustration, and uncertainty. Their hands are shaking a little, but they feel relieved because the pain is finally over. Meanwhile, somewhere else, a large wallet that most people have never heard of quietly bought those same XRP coins without hesitation. Same chart, same price, same red candles, same scary headlines flashing across social media. Yet two completely different decisions are being made. 18 months from now, one of those people may look back at this moment as one of the smartest decisions they ever made. The difficult part is that nothing on the screen tells you who is right. The current price doesn't tell you, the latest headlines don't tell you, and your emotions certainly don't tell you. In fact, emotions are often the biggest trap investors face during periods like this. But beneath all the noise, beyond the fear and uncertainty, the data has started whispering something very interesting. And everything comes down to one simple number, the number 4. Over the past 13 years, XRP has experienced an extremely rare technical event only 4 times. Not 10 times, not 20 times, just 4. That alone should make investors pay attention. Now, I am not here to guarantee what happens next because nobody can honestly do that. The crypto market doesn't hand out certainties. Anyone promising guaranteed profits is selling a fantasy, not reality. Instead, what we're going to do today is look carefully at what happened during the first 3 occurrences of this signal and compare them to what we're seeing right now. Then you can decide for yourself whether history is offering a meaningful clue or simply another coincidence. By the time we finish this discussion, you won't need someone else to tell you what to think. You'll have the facts laid out in front of you. That's what we do here on XRP Update. No screaming predictions, no moon boy promises, no ridiculous arrows pointing toward impossible price targets. Just information, data, and rational analysis. Because after spending years watching crypto cycles repeat themselves, one lesson stands above all others. The market rarely hurts investors because prices fall. It hurts them because fear convinces them to abandon their plan at exactly the wrong time. Let's begin with the signal itself. The tool being discussed is called the Relative Strength Index, or RSI. Don't worry if you've never used it before because the concept is actually very simple. RSI measures whether an asset is becoming overbought or oversold. When investors become extremely optimistic and buying activity accelerates, RSI rises. When fear dominates and selling pressure increases, RSI falls. That's really all there is to it. Right now, XRP's monthly RSI has dropped below the level of 29. That might not sound important at first, but historically it is extraordinarily rare. In fact, XRP's monthly RSI has only fallen this low 4 times in its entire history. The previous occurrences happened during January 2017, March 2020, and June 2022. Now we have a 4th occurrence appearing in June 2026. Whenever something happens only 4 times across more than a decade of trading history, it deserves careful examination. Markets generate countless signals every day, but very few appear this infrequently. The rarity alone makes this situation stand out from the noise that usually dominates crypto conversations. Now let's look at those previous 3 moments because the context matters. January 2017 arrived during a period when many investors had already written XRP off. Sentiment was weak, enthusiasm was low, and confidence was difficult to find. Yet shortly afterward, XRP entered the historic rally that eventually helped produce its all-time high. Then came March 2020. The world was dealing with the COVID crisis. Financial markets were collapsing. Fear dominated every headline. Investors were liquidating positions across nearly every asset class. Yet that moment ultimately became one of the most significant bottoms in modern financial history, leading into a massive bull market throughout crypto. Then we arrive at June 2022. Again, fear was everywhere. The crypto bear market was crushing sentiment. Many investors believed recovery was years away. Yet that period eventually marked another major turning point before prices began stabilizing and recovering. 3 times this signal appeared, 3 times it occurred near major lows. Does that guarantee history repeats itself this time? Absolutely not. Markets do not provide guarantees. But ignoring a pattern with that kind of historical track record would be equally irresponsible. Of course, technical indicators only tell part of the story. Charts can reveal market conditions, but they don't always reveal investor behavior beneath the surface. That's why it's important to follow capital flows. While many retail investors are focused on short-term price movements, larger market participants often reveal their intentions through their actions. Over recent days, more than 25 million XRP has reportedly moved off exchanges. Why does that matter? Because coins moving on to exchanges are often associated with potential selling activity. Investors generally transfer assets to exchanges when they intend to trade or liquidate positions. Conversely, when assets leave exchanges and move into cold storage or custody solutions, it frequently suggests a longer-term holding strategy. Think about it logically. People do not typically move assets into secure storage if they intend to sell them immediately. Instead, they are often preparing to hold through future market fluctuations. This trend has become increasingly noticeable while fear continues dominating social media discussions surrounding XRP. Even more interesting is what we're seeing from whale wallets. Addresses holding at least 10,000 XRP have reportedly reached a new all-time high. More than 332,000 wallets now hold that amount or more. Take a moment to consider the significance of that statistic. While many retail investors are worried about short-term volatility, larger holders appear to be increasing their exposure. Both groups are observing the exact same price action. Both groups have access to the same information, yet their responses are dramatically different. One group is reacting emotionally to red candles and uncertainty. The other appears focused on accumulation. Historically, accumulation phases often occur when sentiment is weakest. That doesn't mean every whale is always correct. Large investors can make mistakes too. However, when accumulation reaches record levels during periods of widespread fear, it becomes another data point worth monitoring. Successful investing often requires paying attention to what capital is doing, not simply what people are saying. Then we arrive at another fascinating piece of the puzzle. According to current market positioning data, bearish bets against XRP have become heavily concentrated. Estimates suggest short positions may outweigh bullish positions by roughly 9-1. That's an extraordinary imbalance. For every trader expecting XRP to rise, several more are betting that it will continue falling. At first glance, that sounds bearish. Many investors hear that statistic and immediately assume it confirms further downside. But markets often become most interesting when positioning becomes excessively one-sided. Here's why. Every short seller eventually needs to buy XRP back in order to close their position. That isn't optional. It's a requirement of the trade structure itself. If positive news suddenly enters the market and XRP begins rising unexpectedly, those short sellers can become trapped. As prices increase, losses on their positions expand, forcing some of them to buy XRP to exit their trades. That buying activity pushes prices higher, triggering additional short covering. This chain reaction is known as a short squeeze. When you combine an extremely rare oversold signal with growing whale accumulation and heavily crowded short positions, the picture becomes much more complex than the headlines suggest. Fear remains dominant, but underneath the surface, there are signs that market dynamics may be shifting. Again, none of this guarantees immediate upside. Markets can remain irrational longer than many investors expect. Prices can always move lower before moving higher. However, these ingredients have historically attracted attention from experienced market participants because they create the conditions for potentially powerful reversals when catalysts emerge. The key word here is catalyst. A compressed spring can remain compressed indefinitely until something triggers movement. The same principle applies to financial markets. Data can point toward opportunity, but opportunity often requires an event that changes perception and sentiment. That brings us to the development many investors are watching very closely right now. One of the biggest discussions in the crypto industry revolves around regulatory clarity in the United States. Market participants have spent years dealing with uncertainty regarding digital asset classifications, compliance requirements, and regulatory frameworks. That uncertainty has acted like a cloud hanging over the industry. Recently, attention has shifted toward legislation often referred to as the Clarity Act, a market structure proposal designed to provide clearer rules for digital assets. Supporters argue that greater regulatory clarity could encourage broader institutional participation by reducing uncertainty. When investors understand the rules of the game, they can make decisions with greater confidence. The possibility of regulatory progress has become a major focus because uncertainty itself often suppresses investment activity. If uncertainty begins to fade, capital that has remained on the sidelines could become more willing to engage with the sector. Whether that happens immediately or gradually remains to be seen. But the discussion is undeniably important for XRP and the broader crypto market. Meanwhile, international developments continue building around the XRP ecosystem. In Japan, major financial institutions have explored blockchain-based financial products and infrastructure tied to digital assets. Activity surrounding XRP-related initiatives continues attracting attention because Japan remains one of the world's most crypto-friendly jurisdictions. At the same time, developments across Europe have highlighted growing interest in blockchain-based financial products, stablecoins, and tokenized assets. These trends matter because they demonstrate that blockchain adoption continues advancing even during periods when market prices struggle. Price and adoption do not always move together in the short term. Sometimes adoption quietly expands while sentiment remains negative. Then eventually, market perception catches up to the underlying progress. This disconnect between price action and real-world development is something long-term investors often monitor closely because it can create opportunities that are not immediately obvious from chart analysis alone. Another factor worth discussing is institutional interest. Throughout recent years, many traditional financial organizations have moved from skepticism toward cautious experimentation with blockchain technology. Some institutions remain hesitant, while others have begun integrating digital asset solutions into various business models. This gradual shift reflects a broader recognition that blockchain technology is not disappearing. Instead, companies are increasingly evaluating where it can provide efficiency, transparency, or cost savings. For XRP supporters, this trend is important because Ripple's long-term vision has always focused heavily on financial infrastructure and cross-border payments. Whether every initiative succeeds is impossible to know, but growing experimentation across the financial sector supports the broader investment thesis that blockchain adoption will continue expanding over time. Investors like Raoul Pal frequently emphasize this concept. Their focus is not on daily price fluctuations, but on whether the long-term thesis remains intact. If the underlying thesis remains strong, temporary volatility becomes easier to tolerate. Now let's discuss what investors can actually do with all this information. First, understand that nobody knows the exact bottom. Anyone claiming certainty is guessing. Markets rarely provide perfect entry points that are obvious in real time. Most bottoms only become clear after they have already passed. That's why many experienced investors use dollar-cost averaging. Instead of trying to predict the exact lowest price, they gradually build positions over time. This approach reduces emotional pressure and eliminates the need for perfect timing. Second, only invest capital you can afford to leave untouched for an extended period. Many panic sales occur because investors commit money they may need in the near future. When financial pressure increases, patience disappears. Third, focus on fundamentals rather than fantasies. Sustainable wealth is rarely built through unrealistic expectations. It is often built through consistent decision-making, disciplined risk management, and a willingness to remain patient while markets fluctuate. When we step back and examine everything together, the picture becomes clearer. We have one of the rarest oversold signals in XRP history, appearing for only the fourth time in 13 years. We have historical examples showing previous occurrences appeared near significant bottoms. We have growing whale accumulation. We have heavily crowded short positions. We have ongoing discussions regarding regulatory clarity. We have international adoption developments continuing in the background. None of these factors individually guarantee a major move, but collectively, they create a narrative that is far more nuanced than the fear dominating many conversations today. Markets are rarely as simple as the headlines suggest. The loudest voices often focus exclusively on recent price declines, while ignoring broader developments unfolding beneath the surface. That's why data matters. Data helps separate emotion from analysis. So let's return to the two people we talked about at the beginning of this video. One investor sold because fear convinced them the story was over. The other quietly accumulated because they believed the data deserved attention. Which one will ultimately be right? Nobody knows today. The market will decide that answer in the months and years ahead. But what we do know is that some of the most important opportunities in investing have historically appeared when fear was highest and confidence was lowest. Whether this becomes another one of those moments remains to be seen. What matters is making decisions based on facts rather than emotions. That's how long-term wealth is often built. Not by chasing excitement, not by reacting to every headline, but by staying calm while others panic. Let me know down in the comments whether you're accumulating XRP in this zone or waiting for lower prices. And if this rare signal does end up repeating history, where do you think XRP could be headed next? As always, thank you for watching XRP Update. Stay informed, stay patient, stay focused, and I'll see you in the next video.